An ascending triangle looks like this. It looks very simple to draw, and that's because it is. A common mistake is that a rookie trader starts to draw them all over his charts, and without understanding the underlying psychology of the pattern or the nuances of the pattern, he starts to trade them. It takes him 3 minutes to learn about the ascending triangle chart pattern and another 3 minutes to apply it. So what is wrong with this approach? It seems to be sound, isn't it? Well, let me tell you, he doesn't understand how to discern between a high probability ascending triangle pattern and a low probability ascending triangle pattern. Specifically, he doesn't understand how to read the price action within the structure of the triangle. You can call it the structure within the structure if you like. The structure within the structure is how you differentiate high probability setups from low probability setups. I'd like to show you two examples of an ascending triangle right here. Which do you think is high probability? Make a quick guess. And this is the answer. Did you get it right? If you didn't, not to worry, because you will definitely understand what makes a high probability breakout setup by the end of this video. In this video, I will teach you how to read the structure within the structure so that you can filter out the low probability setups and focus on the high probability ones. Now, the opposite of an ascending triangle is a descending triangle, and you can apply the same concept to a descending triangle as well. But because I needed to keep the title to 100 characters max, I put it as ascending triangle. You can also apply the same concept to other chart patterns like the head and shoulders and double top, though it requires a bit more explanation for those patterns. If you'd like me to cover that as well, please leave a comment down below letting me know. And if there's enough interest, I will create a video showing you how to read the structure within the structure for those patterns. For now, please do me a small favor and hit that thumbs up button. It helps support the channel and I would really appreciate it. If you are new, do hit that subscribe button as well because I release a couple of new videos every week, sharing with you my latest insights and learnings as I trade the market together with you. As always, we do a giveaway worth $37 for our plug and trade package as an incentive for you to pay close attention to what is being taught in this video. So if you wish to gain access to the indicators we use, then look out for an emoji somewhere in this video. You can also find the full instructions in the pinned comment down below as well. So back to the ascending triangle. Before I go into the anatomy of a high probability ascending triangle, it's important to understand the underlying psychology of the ascending triangle. If you understand the underlying psychology, it will become very easy to differentiate between high probability setups and low probability setups. So right here, this is how an ascending triangle looks like. It consists of a horizontal level and an ascending trend line. The ascending trend line is drawn connecting the swing lows, and you can see that the lows are getting higher. From a psychological standpoint, what this means is that the buyers are buying at a higher price each time. So buyers are buying into resistance and anticipating the breakout. Think of it this way. Why else would a buyer buy into resistance unless he expects the resistance to be broken? So this is what's going on when you see an ascending triangle. Now, you must draw the trend line correctly. In my previous video, I dive deep into how you can draw the perfect trend line. There are 2 rules that you must follow. In this video, I'm not going to go through them because I want to focus on the ascending triangle chart pattern. But I will leave a link to that video at the top right corner and at the end screen of this video if you have not watched that video yet. So do check that video out next, especially if you are a new trader. So let's look at the structure of a high probability ascending triangle. So this is how it looks like. Now, if you are not experienced or do not yet understand what to watch out for, you will simply see this as yet another ascending triangle. But let me break it down for you. The first thing worth mentioning is that there is a bullish engulfing pattern at each swing low. This tells you that there is strength at each swing low. It's even better if the price doesn't spend too much time at each swing low. This indicates strong buying pressure. I'd like you to contrast this structure with this chart over here. Right here, you can see that the swing low doesn't consist of multiple strong engulfing candles apart from the one at the first swing low. And look what happens to the ascending triangle pattern. It turned out to be a fake out. The pattern looks identical, but the structure within the ascending triangle structure is different. And that is why it is very important that you understand how to read the structure inside the structure. Do not simply treat every ascending triangle as equal and blindly trade them. This is the small nuance of the pattern that most traders miss. That is why they are unable to differentiate between a high probability setup and a low probability setup. So the first nuance is to pay close attention to the price action at the swing lows. If you see strong bullish engulfing patterns of the swing low, that's a good sign that the breakout will be valid. Now the second nuance is what I call the 20 EMA carry. The 20 EMA carry has to do with the exponential moving average carrying price and acting as dynamic support. So the first thing to do is, of course, to input the 20 period exponential moving average. In this example right here, you can see that the 20 EMA is supporting the price as it approaches the level. This is what I call the 20 EMA carry. Price is being compressed like a spring between the resistance and the 20 EMA. This is a sign of strength because it tells us that the buyers are buying high into resistance and attempting to squeeze out the bears. Remember that the 20 period exponential moving average is a moving average that tells us the average price of the past 20 candles. So if it's rising, that means that the bulls are buying higher on balance. The underlying psychology is similar to what I explained earlier about the swing lows getting higher. It's the same concept here. To find high probability breakout setups, there are two nuances you must pay attention to. The first being engulfing patterns at the swing lows, and the second being the 20 EMA carry. In some instances, both nuances will happen concurrently, meaning to say that you will see engulfing patterns at the swing lows and the 20 EMA carry happening at the same time. Such setups are rare, but these are the highest probability setups that you can go for. When you spot such setups, you should go for it because these are high probability. Don't get me wrong though, it doesn't mean that you have to see both happening at the same time. It's acceptable for you to take a setup that has engulfing patterns at the swing low. You do not need to see both happening at the same time. You can apply this for the descending triangle, which is the opposite of an ascending triangle as well. Now that you understand how to identify high probability breakout setups, let me quickly run you through how to trade these setups just to be thorough. Your entry could be a buy stop order at the top of the ascending triangle, or when the price closes above the ascending triangle. The key advantage of setting in a buy stop order is that you do not need to stare at the chart all day and you won't miss out on the trade. Sometimes, if you wait for the candle to close, then the price has already moved quite some distance and it's already too late. Now, your stop loss goes below the recent swing low. You do not need to set your stop loss at the extreme point. This is my favorite way to trade a breakout because your stop loss will be very tight, and that would mean a great risk to reward ratio. So summing up this video, I caution that it is not wise to trade every single ascending triangle chart pattern and the importance of looking at the structure within the ascending triangle structure. Specifically, I pointed out to look for engulfing candles at the swing lows and the 20 EMA carry as price heads into the horizontal resistance level. The highest probability setup is when both elements are present, even though it's not necessary for both to be present for you to take a trade. Lastly, I explained that your entry is above the ascending triangle, which could be a market order upon close of the candle or a buy stop order. And your stop loss goes below the recent swing low. And that's it for this video. I hope you got value. Make sure to hit that subscribe button if you have not. As promised, I will leave a link to the video that shows you how to draw a trend line perfectly right here. If you have not watched it, please watch that video next because you must get the trend line right if you wish to trade an ascending triangle chart pattern. Thanks for watching. I'll catch you in the next one.